Hi, everyone. This week we're going to talk about Liberation Day 2.0. What does it mean for the markets and investors?
All right, we've got an earnings preview from some of the companies we covered in the first quarter, including Starbucks, AT&T, and Tesla. So looking forward to that.
So, welcome to IVoT Eye on Investing, a discussion of the markets and investing from a long-term fundamental perspective, hosted weekly by IVoT Academy. I'm Ed Butowsky, and I'm joined by Emile Westergaard, CFA, and as usual, joined by our esteemed IVoT market analyst, Andrew Tang. Welcome, Andrew. How was your week?
The week has been good. Yeah, a lot of traveling, a lot of driving. So especially, we just celebrated 4th of July here in the US, and there's lots of cars on the road. Why? Because gasoline is cheaper now. So, we see a lot of people going to the beach. It was quite fun. And you?
Well, I spent my time sitting on my rump at home, not really doing anything on the 4th, watching everybody driving and flying everywhere. It felt good not to go anywhere.
Well, and here I am in Lima, Peru. No 4th of July here. But I will say, just for what it's worth, I was speaking to a friend of mine who performed. She's a musician. She performed at a mariachi concert this weekend. And just interesting her feedback of the fear in the Mexican community around what's going on with ICE and the immigration clampdown. So a lot of her fellow musicians are really feeling like they are not safe at this point living in the US. Just interesting to know, as someone who's not in the country, not experiencing any of this directly, that's pretty strongly felt in some of the I guess you call it, immigrant communities.
Yeah, but they're only going after people who have records or people who are accused of things. They're not going after just regular people.
Well, I know they've gone in the news, they've been going after academics who have views that they have been espousing views on campuses or whatever. So I don't know that it's that simple, but that's not how it's felt in the community anyway. They don't feel safe. That's what she was saying, for what it's worth. But in any case, I don't know what that means for the market or the economy at this point, but just I'm out of the loop, right? So I get this all secondhand as someone who's living in a different universe.
Well, we have a housekeeper who is from Costa Rica, and I have no idea if she's legal or not legal. I don't even want to ask her. But I think that there is a fringe group. When I say fringe, I mean people doing, blue collar jobs that if they were kicked out of the country, I mean, our lawns would be a mess, our driveways would be a mess. I mean, everything would fall, victim to a policy of getting rid of these people. And I don't think that that is what the Trump administration is driving, this movement towards. I think they're trying to get rid of criminals and people who came in illegally that pose a threat to the country.
Yeah.
Yeah, that's definitely the case because landscaping companies and also cleaning companies, these are the two areas. Also some farming as well. The farm hands, a lot of them, they're undocumented. So definitely
A lot of elder care too, which is kind of interesting, right? I mean, I know I lived in Lambertville, New Jersey before I came down here, and really, I mean, there was a whole encircling this very affluent town was, I don't know what you call it, a lot of housing for illegals, doing a lot of, as you said, the lawn work, but also the daycare work for elderly. So there's definitely, obviously, going to have to be a selective application of these kinds of issues. Anyway.
Well, let's get back to what we're here for.
Yeah.
And that is to talk about the overall market. So, Andrew, what is the one thing that's really kind of keeping you up at night right now?
Well, we just recently, Monday, we just recently got Liberation Day 2.0. If you remember back in April 2nd, Donald Trump held up two large cardboard of ambiguous signs saying reciprocal tariffs to countries around the world. Um, and then there was a July deadline. And now what we have gotten yesterday was a second version of this. So countries from Laos to Myanmar to Cambodia, Thailand, all the way down to Japan and South Korea and Tunisia, they haven't sealed the deal with the U.S. basically. So many countries, including the EU, they have made deals and concessions with the White House, but there is a handful of companies that have not. And the U.S., just posted reciprocal tariffs in the amounts of anywhere from 25% all the way up to 40%. So Laos and Myanmar, they're at 40%. So, and the deadline for the talks to take place, it's going to end in August 1st. And so this tariff 2.0, it's not causing a lot of anxiety and uncertainty according to the stock and bond market. Because if you look at the volatility index from the previous version of Liberation Day, it ticked up all the way to briefly at 60. Okay. Normally, when the VIX is above 20, there is a cause of concern. If it's about 30, it indicates that there's a crisis. So right now, the VIX is trading under 20. It's still hanging about 17 right now. So it really goes to show that the market is calling Trump bluff on this one.
It's amazing that we would be calling out countries like Laos and Myanmar, um, but that'll show you that no country is going to go untouched. But Japan and South Korea are very, very big trading partners compared to Laos and Cambodia and Myanmar.
Oh yeah, and obviously Japan is still a large export country as well as South Korea, and their tariff rates are set at 25%. Myanmar, Laos, Cambodia, Thailand, they're as high as 36 to 40%. Again, my belief is that these are the numbers, headline attention grabbing numbers just to get them to talk to the White House. If you ask me, Myanmar and Laos and Cambodia, they are more focused on lower tech, export items, and I believe, their gross export and the amount of GDP, contributing to global trade from those countries are not that significant. But again, this is quote unquote out of the deal continuation. And so I still believe that the countries will continue to have talks. And according to Scott Basson, his mailbox was full, so he needs a couple of days to even just to sort through all the emails and communications. So we will see. I mean, right now the market it's not negatively reacting to this news. I guess maybe the White House cried wolf a couple of times, and the market is showing resilience and really either complacent or they're just calling the White House bluff on this one.
Well, maybe it's because none of these are really major economic partners or trading partners, so it doesn't materially affect things. Just like Iran, is only 3% of the world's oil production, and that
Correct.
did not have a major impact when that occurred. So,
Yeah. And
so
then with Iran is real interesting because most of Iran's oil were exported to China. China is the biggest customer here. So that's why, yeah, in the US and the global market, that didn't cause any kind of stress that we would expect.
yeah, it's happy to see that a lot of people and a lot of strategists are looking through the headlines to the raw numbers to see if there's really an impact or not.
Yeah,
Um,
it's really true because the stock market, namely the S&P 500, if you just want to name an index here, really have gone through many shocks, all the way from COVID since 2020. There were many, many shocks out there, including war between, Ukraine and Russia, Israel and Hamas, and then Iran. And then you basically can see the resilience of the market. They were also wrong again about the earnings decline of the S&P 500 companies, but what we actually gotten is an increase. So the market, it's really climbing a wall of worries, as they say. And we are beginning to see, obviously, we hit the market top. The question, million dollar question becomes, can this growth continue? And again, one of the more popular and larger concern is our debt levels are getting out of control. And so, can we grow out of this problem? And I think we can, given the right mixture, the right environment. Interest rate needs to come down, and I believe we can grow out of this problem. We need to also create incentives to harness and to make sure that growth will continue to basically take place. So a continuation supply to power, making sure that we have enough power to power the AI infrastructure bill. These are a couple of things that the government can do to ensure growth will be on track.
Well,
Yeah,
that's all.
I got a side question, separate topic, just for a minute.
Mhm.
Because Andrew's got this, as we know, great weekly newsletter, and anyone who's watching the show, we can message us in chat, and we'll get you on the mailing list for his really excellent weekly newsletter on the markets. And in the newsletter, you talked about the fact that what was recently announced in terms of mortgages and allowing Bitcoin
Oh, yeah.
to be reflected as an asset. I just wonder what your view is on that, as a relative to the markets, relative to mortgages. Is that impactful to things in the U.S.?
Absolutely. This is actually groundbreaking. So what we have seen from a very high level is that we have seen the crossover for Bitcoin, just Bitcoin specifically, okay? Because Bitcoin store value, other crypto, they have utilization, and then, newer and better and cheaper, tokens can come about with ICOs. But Bitcoin specifically, as a store of value, has crossed over from a technology fad, okay, now all the way to a hedge against fiat currency, against central banks, and the problem again with debt, circling around nations and countries printing too much money and so on and so forth, inflation out of control. So what this marks is a pivotal moment as well, because this is directed by the Federal Housing Authority, basically asking Freddie Mac and Fannie Mae to include Bitcoin as a qualified asset for home buyers to basically tally up on the amount of assets they have. So, for example, if somebody is looking to buy a new home, they have $100,000 in crypto, they have $100,000 in savings account, and they have $100,000 in other assets. They will qualify by be able to achieve a cheaper cost of capital, because now instead of $200,000 of assets or equity, now they can count as 300,000. So their loan is not seem as risky, and therefore you can bring down the cost of borrowing. And so this is a huge plus. And the implication to the consumers around the world is that they will have this going to lower the cost of capital or lower the cost of borrowing for home buyers.
Well, that's some very fundamental information. And I use that word because I want to get to Emile and have him go through the fundamental of a bunch of different stocks that he has talked about previously.
Sure. Well, the second quarter just closed out as of last week, right? So we are entering into second quarter earnings season. We, as a group here, the three of us, looked at 11 stocks in our first quarter out with this show. So that's pretty cool. And so my view is, over the next couple of weeks, we'll do previews, three companies at a time, on the second quarter. And as I mentioned at the introduction, we're going to take a look today at Starbucks. We're going to take a look today at AT&T and then at Tesla. Again, this will be more of a high level of where things stand going into the quarter, what the market really looks like it's expecting going forward for each of those companies. It's dramatically different. So it's pretty interesting across the three companies. So, and we do this, as we all know, here with the IVoT Forecaster as the kind of anchor of our discussion, right? We want to know what is the current cash flow value of the business compared to the stock price. And we have the tool, again, calculates the cash flow value based in, right now, the tools are all based on first quarter numbers. So these tools are all going to be updated in the next couple of weeks with second quarter numbers, and we'll see what the second quarter cash flow value is. So starting out with Starbucks, let's just go to the tool.
And Emile, I just want to insert that I think it's important for everyone to know that this is a fundamental analysis, not a growth or technical analysis. And the difference is that we're looking at cash flow and earnings and growth rates and discount rates, and that's how we're looking at these. So it's important to note that you might see some analysts that have recommendations on Tesla of $500, but you're going to see here it's going to be very different than that.
Well, and we're not, first of all, to everything you just said, we're not recommending stocks. First of all, right? We want everyone to come to our platform and start using our forecasters to forecast growth. So we are forecasting growth, right? So if we go to Starbucks right now, in the most recent quarter, their cash flow declined by 15%. The enterprise value per share based on the first quarter was $104. And the shares are currently trading at 99. So you're basically paying par for Starbucks shares. And the question is, what do you think? And that's down, though, from 124 a year ago because cash flow declined. So a year ago, based on $1.5 billion, the shares were worth 125. They're now worth 104. What are they going to be worth? What we want to know as fundamental investors is what do we think the shares will be worth in the future? What do we think they'll be worth in the future depends on what we think will happen to cash flow in the future. In the case of Starbucks, right now, the market is pretty much in suggesting no cash flow growth. You're paying exactly what it's worth right now, essentially. So if the management team at Starbucks can grow sales again by 10%, and let's look at cost structure, because I think that's very important here. You can see that their cost of sales went up by 350 basis points in the most recent quarter. So costs were a bit out of control on the negative side. So if we assume new management, which is the guy from Chipotle, Brian, is going to do a good job going forward of managing costs, and we can discuss how he's doing that. We have discussed that on a prior show. Let's say he can get this back down to 75%. Then you have a 3-year price target of $171. So this is a growth tool. We're, in this case, growing cash flow significantly based on the strategy of a simplified menu and simplified cost structure that Brian is trying to promote through the Starbucks system. And that's really the preview, right? The question is, for the upcoming quarter, are we going to start to see evidence of a turnaround in cash flow? It was not there in the first quarter. So we're waiting to see that the simplified menu, which makes the customer experience faster, they've cut out a lot of frills from the company, is that going to start showing up in the numbers going forward? And that's really the preview of the second quarter, pretty straightforward. If we go now, and I actually am using our back-end tool because we're fixing the AT&T tool right now, but let's then look at the second company that we're previewing, which is AT&T. AT&T is currently trading at $28. It's up 23% year to date, so it's been very strong this year. It also has a very nice dividend. Let me just remind myself what the dividend is on AT&T. It is currently sitting at 4%. So it's come down. Obviously, as the stock goes up, the dividend yield comes down, but you make money on the share side of things. Now, the cash flow value of AT&T right now is $125 a share, according to the IVoT Forecaster, and it's up slightly from a year ago. So you're paying $28 for something which, according to our calculations, has a net present cash flow value of $125. The question is, again, what's going to happen in the future? A way to interpret this tool is to say if the market's selling it for $28 and the current cash flow value is $125, then really what the market is saying is cash flow is going to fall apart at AT&T going forward. The market price is suggesting that. We don't see evidence of that. The business seems relatively stable. It's not growing. I think the biggest reason that the shares are trading at such a discount to their cash flow value has to do with their debt load. They sit on, if you go down to the bottom of the tool here, they're sitting on 117 billion of long-term debt. That's a lot of debt. And I can see how that can maybe make some investors nervous, but they have no problem right now funding that debt. So, and they're working it down steadily. There have been some sell-off of assets over the last couple of years, but I think AT&T looks very interesting. And again, the question in the coming quarter will be: is cash flow remaining stable or growing? Does the business still look pretty solid? If that's the case, I think it looks pretty interesting for a long-term investor at these levels. I mean, you're buying it very cheap relative to the cash flow. And again, I want to pause for a moment and just say again, back to Ed's point. Every company in the world ultimately is simply a cash flow machine. Whether they're selling electric cars, whether they're selling AI, whether in this case they're selling mobile and Wi-Fi, they're all simply valued long-term as a cash flow machine. That is the ethos of a fundamental investor. I can know what the cash flow is now, I can know how much that's worth, and I can make my own forecasts of future cash flow using our cash flow tool called the IVoT Forecaster. And then the last company we're looking at today, which has been one we've actually looked at twice in the quarter, is Tesla, currently trading at $454. Is that right? I thought it came down from that.
It came down from that. Yeah. Right now it's trading at about $298, sub 300.
Yeah, and the enterprise value though here is roughly $61 a share. So clearly in this case, even though the shares have traded down and we can see it's been a volatile year, that the shares are still dialing in a lot of future cash flow growth, right? If it's currently worth 61 and it's trading at 280, then you have to be a bull on the future of Tesla, whether it be the batteries, whether it be the robo-taxis. And I think one of the things we can do, and we'll do, I think sometime over the next couple of months, we're going to do some special shows, maybe 1 hour on each of these companies and go deeper into where the future is supposed to come from and look at it from a fundamental perspective, right? Because again, talking about robo-taxi as an opportunity is one thing. Evaluating the amount of cash flow robo-taxi can contribute to Tesla over the next couple of years and what that means for the actual value of the company is really what we're about here, doing fundamental analysis. So I'll stop there and we can discuss any of those companies and anything having to do with, I think, our second quarter coming up.
I think it's amazing that you come up with a $61 forward value, and then other companies have come out and said $500 on their target price.
Well, they have to be assuming a lot of future cash flow growth. All we're saying right now is, as a cash flow machine, it's only worth $61. Forget what they do. I don't care. It's simply a machine that's puking out cash every quarter, and right now that cash flow stream is only worth $61. That's, to me, relatively factual. If you're saying it's worth 500, you're just assuming this thing is going to blow through the roof in cash flow over the next 5 years. 2 years ago, this company was worth over $200 per share on cash flow. So their cash flow has been completely falling apart. And the question is that going to rebound? This stock really fell apart based on China tariffs earlier in the year. You have to believe the China business will rebound, that they're competitively positioned with their cars, that they're competitively positioned in the robo-taxi market, and or they're super competitively positioned with AI and or batteries, right? So all of those are completely open to discussion. I think what you can do with the forecaster, as I said, and what we could do in a show is look at each of those opportunities and say, well, how much cash flow can they generate from each of those opportunities? That's, for me as a fundamental investor and analyst, what I would want to do. And I think totally doable.
Yeah, I think the robo taxi is something that should be interrogated to figure out what kind of cash flow are they projecting out of the robo taxi.
Yeah,
Right. Well,
you can take the ride-hail market and actually estimate what is the size of that market. So, for example, if the ride-hail market is about $2 trillion, then what is Tesla current technology or with the robotaxis? What are they able to capture? Okay, and then you assign, the possible or potential top line revenue as a result of their participation. And then from different level of achievements onto getting to the endpoint or to be able to participate in this revenue generation, what steps are there and how far are they along? And so when you add all that together, that's how most analysts come up with that price target.
okay, well, I'm going to set up that show and we're going to take a look at that particular topic because there's more, right? There's also barriers to entry. Are they really, by having their own cars doing this, are they better off? Or is Uber better off being able to select from different vendors in terms of robo-taxis? Because they're not the only ones building robo-taxis right now. And by the way, a lot of the way you can forecast the value of this marketplace is using Uber. And we will also, I think, in the next, quarter anyway, definitely do a show on Uber as a kind of comparable to Tesla and see how that looks. Again, how important is it to own the hardware, basically?
Yeah, yeah. To briefly comment on that, I think most of you have already understand that Waymo is owned by Alphabet Google. There are the other company that are out there. They're successfully operating robotaxis in multiple cities in the U.S. But the biggest challenge here is that Waymo's been in operation for 16 years, 16 years, and they're still not able to scale. And the biggest reason behind that is the cost of, the unit for the hardware. It costs over $100,000 per unit for Waymo to put a car on the road with their sensors, with a LiDAR and redundant camera system, and so on and so forth. But for Tesla, we can see from the launch of Robotaxi Day in Austin that their cost of capital or their cost of goods with an existing Model Y, the only difference is just the software, is roughly about $30,000. And going down the road, if you project Cybercab, the one with the butterfly doors and completely different architecture in terms of chassis and make and paint and all that, that comes down to roughly about $20,000. So, it's incredible on how Tesla can scale with a snap of the finger. And all it takes is updating the software, and they're dramatically improving it as we speak. They have the most data, and they have the highest ability to improve the software for an actual launch. And so Cybercab it's going to debut in sometime around mid to late 2026. And that's what's going on with Robotaxi and with Tesla. So absolutely, I look forward to the deep dive discussion.
Yeah,
So,
let's do a show with the numbers. Yeah, go ahead,
so
Ed.
you said that Waymo's been around for 16 years.
16 years, my friend. 16 years. And they can only scale about, I think the latest announcement said, yeah, we can increase production by 2,000 vehicles. It's insane. It's insane. It's really scalability and the cost of hardware is extremely expensive. So that's why Waymo secretly, you're not hearing it from the media, but they're secretly testing the Tesla video system instead of having all these monstrous add-on that you see, right? The spinning sensors and LiDAR and you see all that. It is very, very expensive. Even if you put it on a Japanese car or a cheaper car, it is still very expensive to operate the sensors and the software. And the tech is in my view, is inferior to Tesla. They really, in terms of Tesla, they built the software and hardware from the ground up. There's no system that is better than Tesla when it comes to correcting and improving on the operating system. Don't forget, if you buy a regular car, you have to deal with tier one, tier two, and tier three suppliers. And the maker of these switches from Bosch, from AC Delco, all that, they don't talk to one another. Okay, they don't talk to each other. So how are you going to solve these problems and make improvements if you have to deal with all these different companies that makes components when when you have a car? So that's the huge advantage that Tesla has. So, I mean, I drive two Teslas. So, I mean, I have a Cybertruck and I just bought it recently. And I have a Model Y. And they both have full self-driving. So I personally attest to it that full self-driving after version 12, it's greatly, greatly improved. And I consistently, almost every other week, I have software updates and it makes improvements. I'll
Well,
stop here. So I
so
apologize
so
for being so long-winded.
in closing, I want each one of you to take about 60 seconds and just give me your thoughts on the week. Emile, why don't you give me your takeaway?
Well, we're still a couple of weeks away from earnings on the companies that we talked about, so we'll have more next week. But I think to Andrew's point, I think it's going to be a pretty good earnings season, and I think I got to believe, kind of along with Andrew, that AI is going to be a powerful technology for the markets over the next couple of years. That we're just beginning. We're really in, as Andrew said consistently, phase one. I'm stealing your stuff, Andrew, but that's true. I wanted to circle back though and say, because we talked about immigrants at the beginning of the show, that getting rid of the car taxi Uber business for individuals as a job, it has got to be a hit to the immigrant community, because that's definitely one of the first jobs people take when they come into this country. So just interesting there as a kind of a doorway into the US economy anyway.
If they can read a map.
I think we have to do another whole show on what the implications of the tech boom and innovation boom and what the implications are for AI, when we reach at a stage where we have autonomous driving. Think about all the truck drivers, not just ride hailing, so there's a lot of jobs that robots and robotics, software and hardware, they're going to replace. We need to do an another hour show
Yeah,
just to
yeah.
go through all those topics. So for me, definitely Liberation Day 2.0, the market is calling it bluff.
Okay, well, thank you for watching IVoT Ion Investing. Please subscribe to our YouTube channel and click on the link in the description to register for early access to the platform opening soon, which includes access to our powerful IVoT Forecaster and fundamental investment training. We'll see you next week, and thank you very much, gentlemen, for joining us.
Thanks, Ed.